This is Steve Hayes in London at EPRA's annual conference. I have with me Stefan Larsen, who's Portfolio Manager for European Securities at Presima. Stefan, welcome.
Thank you.
First of all, where do you see the opportunities in the listed real estate markets at the moment in Europe?
I would say generally right now we're relatively cautious in Europe. We are a bottom-up investor, so that's reflected in our assumptions. I would say the two pockets of value that we do see right now are, first of all, I'd say companies where expectations are very low and where those companies might actually meet those expectations. Probably the Swiss market is an interesting example where those companies are doing quite well because the expectation is that there won't be much growth, and that's actually what we're seeing right now. Another example of that might be Germany, where we don't expect very strong growth, but that's actually what's playing out right now. So I think that's an interesting environment for companies with low growth, but that might meet expectations. Another area where we see value is actually very niche sectors where we actually might see some growth also. So I think one interesting niche within the German market would be residential, where there actually might be some rental growth. If you look at the UK market, we might see some growth within a niche sector like student housing. So we're actually looking at those sectors, trying to see if the companies within those sectors actually represent value.
And where do you see the biggest threats then?
I think the biggest threat is the general economic environment. So we do reflect that in our assumptions, which makes us quite cautious overall right now.
And are there particular markets where you wouldn't go or you would tend to avoid?
We won't avoid per se any market just because we're negative on it. We'll try to reflect that in our pricing. So we are willing to go in markets, look at the Spanish example. So we will invest in markets that will have some Spanish exposure if we believe that's correctly priced in the securities. So for us, it all comes down to pricing. And as a bottom-up investor, that is the secret to our success.
And what has been the impact of REITs and the expansion of the REIT structure across Europe, in your view?
I think over the past 5-6 years, it's been a bit of a disappointment. Recently, we've had the Italian experience, which hasn't really played out yet. But if we look at the two other experiences being the UK and German markets, I think we've had a general disappointment as to the expansion we've actually seen. And I think we can blame partly investors and partly the companies for that. I think the companies aren't delivering exactly the vehicles that investors want. So investors are looking for high yield in this environment, high sustainable yield. And the companies, I believe, are still looking at a bit of the growth angle with too much focus and probably not enough at the income angle. And if we look at the investors themselves, they're probably not willing to put money to work in Europe. If we look at North America, companies are able to raise money quite easily. In Europe, it is a challenge. If we look at recent IPO experience in Germany, the third German REIT, Prime Office, that company had a lot of difficulty attracting capital. We saw another example in the UK in the fall, which coincidentally had the same name, Prime Properties, which was very good assets for the listed market. So they were extremely long leases with good covenants, and they weren't able to raise money because investors weren't there to put the money on the table. So until companies present the right vehicles and investors are willing to put the money on the table, I think we won't see the growth in the listed market in Europe, and Europe's share in the global real estate securities market will decrease over time.
Stefan, thank you very much.
Thank you.
For this and other industry interviews, please go to REIT.com and EPRA.com.